Welcome back to another video of Trading Titans. I'm Titan, aka T, if you're only following me on social media and not within our Discord group. In this video, I'm going to go over my thoughts on the stock market. Is it over? Okay, is the pain over? Is the blood in the streets done? Are we done? Are we back into a bull market? Can stocks go back up again? All that fun stuff. And then I'm going to go over previous stocks I talked about in our last video. And then I'm going to go over two stocks that I think is going to drop. Okay. And you can, make money off of them. All right. So if you like that, if you want more of this content, like, subscribe, comment, hit the notification bell. If you are interested in more videos, if you want to keep up with me every time I upload a video. And without further ado, let's get right to it. Okay, now today was absolutely crazy. It was insane, right? We saw a SPY move all the way down to 420. Okay, and I said yesterday I was worried about this gap all the way to 400. I was sure that we were going to see that move today, but that would have been absolutely insane if we saw that move today. Okay, so we didn't see it. Okay, so we didn't see it. It looks like what I said yesterday is about to play out, where we see a move towards 450. I did say 460, I don't see, but we could see that move based on how fast this is. And like I said, Tuesdays and Wednesdays are typically bullish days on the market right before Jerome Powell speaks. And then Thursday, everything plummets, okay? So it looks like everything's going to play out that way, okay? And luckily, well, not luckily, but it looks like the market didn't have a sell-off towards close, which is a good sign. Okay, that is a good sign. So I think we're going to continue up tomorrow. Okay, I think we're going to continue up tomorrow. My only thing is this was a very, very fast move. Okay, this was a very fast, insane move. This happened within like an hour. Okay, it just flew. Okay, the SPY just absolutely flew. Like, this is crazy. Okay. So yeah, it went all the way from 433 all the way up to 440. So that was a crazy move. So it looks like the investors want to knock this out, knock this 450, 460 out, maybe get some, get rid of all the buyers and things like that, and then we see a continuation back down. Okay, I'm not buying this move for a second. I don't think this is I don't think we're going to enter a bull market anytime soon. Okay, I think this is just a sympathy move. Okay, not only that, Microsoft has earnings tomorrow, so this could be a babysitting move for Microsoft. Microsoft is a big company, a big industry within the stock market. Okay, and the last thing the stock market wants is for Microsoft to crash really, really, really low. Okay, so that could be it. I just think this is a sympathy move. I'm not buying this for a second, and we'll see. Okay, it's really based on what Jerome Powell says come Wednesday, so be on the lookout for that. Look out for this move tomorrow. It looks like it's going to happen a lot faster than we thought. Okay, but otherwise, the stock that let's go over the stocks that we talked about yesterday. So first up is Dollar Tree. You guys been asking me about Dollar Tree. I know it's frustrating. I know it's absolutely frustrating, but you have to give these stocks time. Okay, now even I am shocked that Dollar Tree did not drop with the overall market, because the overall market was absolutely bleeding, like it's just straight bleeding, and Dollar Tree was just living his best life. It just kept going up. Okay, so it looks like what Dollar Tree is trying to do is fill up this gap up to 134, 135 range. Okay, so if it breaks above 135, exit the play. Okay, get rid of it, get out of the play, save, just live to see another day. But as of now, on the hourly chart, we have a head and shoulders pattern, head, shoulder, and another shoulder here. If the head is broken through, then we could potentially, the head and shoulder pattern can fail. Patterns do fail. Okay, so this can go either way. All right, but keep in mind, we still have this gap all the way to 115. At some point in time, this gap is going to have to get filled. When, I don't know, but I was pretty sure it was going to happen. But the overall market carried Dollar Tree right back up, pretty much saved the day. This is absolutely an insane move. I mean, there's no news, okay? There's no good news on Dollar Tree. There's no legitimate news on why Dollar Tree just kept going up all day. So overall, 135. If it breaks above 135, if you really want to play it safe, 134, get out of the play. All right. Yeah, that's about it on Dollar Tree. Okay. So I know it's frustrating. Overall, February 18th, we have a lot of time on this play. It's about 3 weeks out. So be patient with it. I still am bearish on Dollar Tree. We are still bearish on Dollar Tree. All right. But overall, yeah. So next stock is Lowe's. Congratulations if you did play Lowe's. All right. Lowe's did drop to all the way to 220. It dropped all the way to 220. And yeah, so if you got in Lowe's Friday, you were looking good today. Hopefully, you collected profit before it jumped back up to 232. Okay, so what Lowe's is looking like it wants to do is fill these gaps. Like I said in the last video, that Lowe's has a habit of trying to fill gaps fast. Okay, so we could see that move up to 240, 250. Unfortunately, we didn't get any plays in on Lowe's, but if it does head up to 250, I will revisit this stock. Okay, I will revisit it and we'll see from there, because yeah, as you guys can see, yeah. All right, so look out for that as well. Look out for a move to potentially 250 for Lowe's. I mean, there's space and opportunity here for the Lowe's to fill these gaps. Okay, next up is the stock that I was talking about, Intel. Okay, Intel looks really good. Now we have to keep in mind that Intel has earnings on the 26th. Okay, on the 26th, which is Jerome Powell speaks that day, so I don't think Intel is going to beat earnings. Okay, I could be wrong. We haven't entered a play on Intel just yet. I really want to see how far it can go, how it would play out come tomorrow and maybe Wednesday morning, and then we'll decide from there. But earnings is risky, guys, so just keep that in mind. It's very, very risky. Okay, so what I'm looking at is that Intel could potentially, right now we have the left shoulder here, but I think Intel could potentially see 54, 55 prior to earnings, and then from that point on we see Intel drop. I don't think Intel is going to beat earnings. Okay, that's just me. I don't think Intel is going to beat earnings. Number one, there's still a chip shortage. Okay, there's still a chip shortage. Okay, now it has been recent news today that Biden is urging Congress to help build the chip industry. Okay, so help fund the chip industry, help, basically we need help. Okay, the chip industry needs help, and Joe Biden is pretty much urging Congress to help out, but it hasn't happened yet. Okay, it has not happened yet, and I don't think it's going to happen until maybe the next stimulus package. Okay, so keep that in mind. So right now I'm looking at 54, and if I see that move up to 54, 55 range, then depending on the overall market, I will be looking for some puts on Intel. Right now I am looking at the $50 contract, but that can change, so keep that in mind. $50 contract for February 18th or February 4th, depending on how you want to play it. Right now, February 18th contract is looking really good. Got like over 17K in open interest. If you don't know what open interest is, it just means how many contracts are open in that position. Okay, so basically how many players are playing it. Okay, how many investors are in that play. And yeah, the data is looking good. The delta, but overall, really looking good. But keep in mind, it's not set in stone. It can easily change. Okay, it can change. All right. So another thing is we can just consolidate. We can just consolidate all the way up to their earnings. So we can just sit in this range here, forming another shoulder, and then go from there. Okay. Now, if it does plummet, if Intel does drop, I do have a price target of just a humble price target of 48, but the lowest is 44. Okay, 44. Okay. So be on the lookout for that. I think Intel is. I just don't. I don't see it. I don't see Intel beating earnings, but that doesn't mean, play it. Just wait it out. Just wait it out. See how these next few days go, next 2 days go, and then decide from there. I may revisit this in my next video, maybe tomorrow. Okay, we'll see. All right, but overall, our next play. Okay, next play is Starbucks. Let's go to the hourly chart. Now, Starbucks has earnings February 1st. Okay. Now, I don't think Starbucks is going to be earnings as well. All right. I could be wrong. Earnings, even if a stock doesn't beat earnings, sometimes it still just goes up based off guidance or whatever the case may be. So it can go either way. So that's why it's just better to wait up until then. However, I'm playing Starbucks. I just don't think they're going to be earning simply because they're just not. They don't have workers. People are calling in sick. You're talking about COVID, all that stuff, and I just don't think Starbucks is going to beat earnings. Now they could run up until earnings, but I don't think they're going to beat earnings. Okay, so right now we are looking at a triple top. Okay, now this triple top is not completed. Like I said, we can continue to go up, but right now this is a potential triple top. Okay, so boom, boom, boom. Okay, and then we see a move down, and normally what happens, and normally how I always see these plays happen, is that they break out of these pennants or these wedges, and then they just freaking go up and then plummet right through it. Okay, not even that. Sometimes they curve over and then they drop. Okay, a lot of times that tends to happen. So I think that's what's going to happen with Starbucks. Okay, now if Starbucks breaks above 100, get out the play. Okay, get out the play for Starbucks if it breaks up above 100. Okay, but I don't think they're going to be earnings. I think it's just going to pull one of these moves, boom, and then drop down. My price target on Starbucks is between 93 and 94. 93 and 94. So be on the lookout for that move. Okay, be on the lookout for that move. Not only that, is it this chart? No. Okay, that was a different stock I was looking at. But yeah, that's what I'm looking at for Starbucks. Another stock that I just thought of is AbbVie. Okay, AbbVie. If we look on the weekly chart, this looks crazy. We have a huge bearish engulfing candle here on. First off, let's fix this because that looks crazy. Okay, we have a huge bearish engulfing candle here, and I think AbbVie is going to drop in the near future. Okay, I think it's going to drop in the near future, and right now I have a price target for AbbVie at 120. Okay, 120. Okay, I think it's going to die out. I'm not buying this move for a second. Any of this. Okay, this bearish engulfing pattern is very, very strong right now. And worst case scenario is right now we see a move to 135 and then AbbVie just drops. Okay, so that's what I think is going to happen. I think that because first AbbVie had a price increase from 124 to 142, and what I think is going to happen is it's going to go up to 135. Nostalgia is going to kick in, and then everybody's going to be like, "Oh man, it's going to actually hit 142," and then it just straight plummets after that. Okay, this right here, I would not play against this. Okay, I would not play against that. All right, so that's my thoughts on AbbVie. I think it's going to see a move further down. I don't think after Wednesday, I think the market is going to continue down. Okay, so I think this is just a bunch of sympathy move for the market, where investors bring it up, and then we get cheaper puts, and then the market continues down. Okay, cheaper put contracts, and then the market continues its way down and drag all these plays with it. Okay, but with that in mind, just keep this in mind, guys, that it is important to hedge your accounts. Even though we have short plays, we also have long calls. So we have July calls but we also have February puts. So it's important to hedge your account. This market is absolutely insane right now, so it can go either way. Okay, it can go either way. So despite what I say, I'm not a oracle or anything like that. Despite what I say, make sure you are hedging your account with long plays. Okay, long plays, or just buy stocks, just buy shares. Okay, just to be safer. All right, but otherwise, I believe that's it, guys. If you got something out of this video, like, subscribe, comment, hit the notification bell so that you are always up to date. If you have any questions on any of these plays or anything you should do on these plays, feel free to leave a comment below or follow me on social media, or join our Discord group. And because we have a lot planned for the future, I'm very excited with our Discord group. And yeah, I believe that's it. So until the next video, guys, see you next time.